Traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. It is March 15th, and a boatload of event risk ahead of us. FOMC, BOJ, BOE, G20, Dutch elections. No wonder the market's been so quiet. It's waiting for all this jazz. So before we start, let me know that you can hear and see. Pooja, Sarab, everyone's saying AV is good and okay, super. So we will start real quickly with the dollar. Here's the schedule today. We're going to go through US dollar, euro, pound, or gold, euro, dollar, pound, Aussie, Kiwi, dollar, yen, dollar, CAD, crude. I'll then get into euro, Kiwi, Kiwi yen, and then some of the commodities and take questions. Okay, so before all this big event risk starts, right? Amazing. We are at like the most indecisive point on the chart, the median line of this entire rally from last June, from Brexit, right? The Brexit September trend line. And let's just look, we've spent a lot of time on this year, on this median line. So we have resistance back in September, support in October. The election is where we went up into and really took off from. And then from that point, we've traded on it as support, resistance, traded around it, resistance, support over the last few weeks. Recall that we got bullish dollars in early February because of parallels and overextended dollar, and everyone all of a sudden turned bearish dollars. And we were looking for, probably a move up into, I was thinking that at the time we would be topping on the magenta lines, right? And the ideal point for it, or the ideal time for it, was today, right? Because of FOMC. And there's been a tendency the last several years for the dollar to top on FOMC. At this point, I'm not so sure if we get up there, right? I mean, look, we've already turned down from 2 equal legs up, okay? And if you were to break down here and get, break through the median line again, kind of under the median line, to me is reason enough to think about being on the downside with the dollar. And not only that, but you've got this move lower and then what's clearly a corrective wave higher, which is 2 equal legs. Okay. Now, we can't forget about the bigger picture, and that being that we haven't really broken anything yet, right, support-wise. There is a 58-week cycle, which I'd kind of forgotten about, and basically the low back in US dollar index in August of 2011, the next low is 58 weeks, the next low was 58 weeks, then 58 weeks from that was nothing really. It was kind of the middle of the trend, although you did get a pretty sharp pullback for like a week. Back then, very volatile market, so this, from here to here is actually a decent move. 58 weeks after that was 1 week or 2 weeks before the top in January of 2016. 58 weeks after that would have been 2 weeks ago. Okay, so it could be nothing, or it could be a cycle top, because 2 weeks ago we haven't really moved from there, right? So it is interesting to note that. Really, though, on a very grand scale, on a big picture scale, things get really bearish if you were to break. We'll make this parallel. We'll call it. We'll make it nice and colorful. A magenta line there. That's when things get big, right? So I know it's very tempting to want to churn the hell out of your account when you have 1, 2, 3, 4, 5, 6, 7, 8, basically 2 months, 8 weeks we've been spending and all this crap. But the big move will come, and if it's under here, then it's kind of dollar collapse time. Another thing to know, the seasonals. Okay, so check this out. If I run, this is a seasonal, very simple. You're used to looking at the seasonals like this, right? Like here's DXY, and March to mid-March is one of the bigger topping periods for the dollar in the year. with the others being June and then August, okay? And then post Thanksgiving, as far as some of the big turn dates, some of the big bottoms are in end of April, early May, okay? And then mid-October. But you're used to seeing it graphically like this. Well, if I run the numbers, in other words, this is US dollar, not DXY, but if I run the numbers to just buy at the close of the month and sell out at the end of that month, here are the statistics. And it's kind of tricky because basically if it's 3, that would be March, but it's really April because it's buying at the close of 3, which is the close of March. So regardless, this takes over 14 years of data because that's how far back the US dollar, this index, goes. And you can see the month of April, okay, there have been 2 out of 14 up months, 14%. Okay, in other words, it's really bearish. As far as that's, as far as the month of April is concerned. So not too many up months in April, and April's, historically one of the worst months for the dollar. Funny enough, you can see that if we're looking at March, which would be 2, because you're buying at the close of 2, okay, which is February, and then selling out the end, it's exactly 50-50. It's exactly 50-50, which is kind of to be expected, it would seem. March does seem to be kind of this sideways chop fest. At least it has been in recent years, and this year is no different so far. So if we do it on DXY, which we obviously have a lot more data, going back to the 70s, you can see the results there. You can see that April is one of the worst months. It's actually the worst on a percentage up factor, 39%. So out of 41 total years, okay, 41 Aprils, you've had 16 up and 25 down. So the frequency with which April trades for the dollar on the downside is much higher than that on the upside. Okay, so that is an interesting piece of information and something to keep in mind as we head into the month of April, which will be here before you know it. All right, so there is that. So the dollar, the index, as you know, at the median line, to me, 12,374 is your month opening price, right? Right here, really not a lot to do. If it starts to get going on the upside, fine, but you know how it is when you don't want to chase these moves, right? These knee-jerk reactions. Was looking for the final push on FOMC, but pretty much very up in the air if we're going to get it at this point, because if we were going to get it, I would hope we'd be up here and get that final spike. So I'm open to the downside in the dollar in the dollar generally, basically starting here. Okay. Gold has been really our tell, right? We started talking as early as several weeks ago that we would be thinking that gold could bottom at 1180 on the 15th, right? And here we are. This chart hasn't changed in weeks. So we're currently 1200. 1180 is 20 bucks away for an FOMC move. That's really nothing. And don't forget, again, you do have BOJ. No one's really expecting anything, but that tends to be when crazy things happen, when no one's expecting anything. So just a heads up there. And then again, the other event risk like the Dutch elections, doesn't look like that's going to happen as far as the populist guy getting in, and then G20 this weekend. But it's really about 1180 for turning dollar bear. So if we can get 1180, that to me is the number. Like during today and the rest of this week, I don't know. I always have a gold chart up because I always want to know what gold's doing. But um, if we get a quick move down to 1180, I will be at that point probably sitting there and buying uh, things against the dollar, particularly selling dollar yen, which we'll get into here in a minute. And again, here's the weekly chart, right? And if we put up 1180, you know how big it is, not just because of the low from Jan 27, but lows back here in 2013, 2014, or I guess that's December 2013, January 2014. And then the high from October 2015, pretty close to that level too, 1191. And then you do have a parallel there too. This is the 25 line, quartile line within the trend line back off the highs in 2011, 2012. All right, so 1180, huge, 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 biggest level, cleanest level that I've got out there right now. And then finally, as you put in last night's update, you get the bonds, which are actually trading up today. And go to a weekly chart. Here's the bonds. Again, this is arithmetic scale, weekly, going back to 1981 low, channeling, spike up through the top last summer after Brexit, collapse. Okay, you can even see on the back check on that move, the parallel was important, and we're now getting into the median line. So you're talking about a channel that goes back to 1981, and within a relatively short amount of time, you've actually we're coming back to what would be considered half of the distance of the channel. So for me, I think it's a big level for support. I mean, again, maybe one more little dip, maybe one more dip, and it'd be a big one from here. Okay, in the near term, because 147 handle in the bonds in 144 is about where you are on that median line. So 3 bond points is a biggie. But if she comes out hawkish and then, you get that move down, that might be it for a while. Okay, and you can see the last time we were on this median line, it was major support. And then when we've come from above it, it's been major, major support. So, know what this chart's telling you, right? This chart's telling you that if you can get a rally in the bonds, you're going to get a decline in interest rates, which means that you're probably, given the current narrative in the marketplace, U.S. interest rates being all the rage, you're probably going to see the dollar sell off if you can get the bonds start to work higher again. All right. Not only that, but this, may very well be a 5 down, right? Kind of 1, 2, right? 3, 4, 5. Remember, we got bearish the bonds up here because the divergence on the 10-year and 30-year. And that was late February, and sure enough, the next leg down, well, now I think it's time to go the other way. So that's a big story with the bonds. Okay, let's move on to FX, Euro. One of the things to really like about the upside on Euro, all right, here's just a simple daily. And we've got the analog that we've talked about. I'll show it to you in a sec. But daily reversal support is 105.56. Okay, it's right here. That's the low from the 22nd of February. Closed that day at that level. 105.74 is the month open. 105.56 would actually be a line off these 2 lows. Got to start somewhere, right? And that would come into play really the next 2 days. So to me, today, watch for 105.56. Am I leaving orders there? No, because I'm very much, up in the air and kind of open for anything with the dollar at this point. But let's say, scenario, play it in your mind today, looking forward. Let's say FOMC comes out, initial drop in gold is to 1180 real quick, and then it starts to stabilize. Initial drop in Euro is actually only to 105.56, and it starts to turn up. Probably time to buy it. Okay, stop would be under here, 105.20. Right, play it in your mind, play it forward in your mind, what it might look like, what it might feel like, so you're not surprised. This is the time for us to turn up in the Euro on the analog basis, and here is the analog, as you are all familiar with, I do believe, at this point. right? We're tracking the inverse of 2005, and it's been silly spot on for a while. Basically taking this 2005, 2006, copying it over, and we're making a mirror image of it, and lo and behold, line it up with the first week of 2016, and you end up getting this map, sometimes to the week, sometimes a week or two off, but generally speaking, direction's been pretty good. So it does say that the next leg up should be about to start, but again, with all the event risk coming up right now, you cannot just sit and be long and pray that it works. Lo and behold, what if you get a final spike lower? Right? That would probably be the best setup, to be quite honest with you. If you got one more spike down into, say, 104.60 or something, and then you closed up, right, the next day or two, that would probably be the best setup on a long euro move. Now, I am a little hesitant on some of the euro long stuff, just because of some of the reversals that we've seen in euro crosses the last few days. But the momentum is still pretty good. And as it pertains to the dollar, I don't mind basically holding a long euro bias. That doesn't mean that I am long right now. It just means that's what I'm prepared to do if everything works out, especially with gold heading to 1180. Another thing to like on euro, we haven't obviously seen much of a trend environment in a while, but the 4-hour chart, a real solid trading time frame, and these are the alerts basically that we're going to be setting up for you guys to send out, as Mike was talking about. He's talked about, I think, a little bit in his webinars, but he's also, put a note on the homepage. We're going to have different time frames, but the 4-hour time frame is the best for my style of trading, trying to catch decent moves, right? It's a little faster than the daily, of course, but it doesn't give you too many false signals during a trending move. And the idea is to identify the trend, in this case up or down, and then go with it on the dips or the rallies. And in this case, you had a very strong overbought condition last week, right, on Friday. A very strong overbought condition. While it may lead to a pullback in the near term, it's associated with the beginning of a stronger move in that direction, right? And in this case, we've pulled back enough where RSI has completely moderated itself. It's at 52 right now. We did get down to 43. If we're going to continue higher, you do want to see the indicator hold around 40, okay, and then go to new overbought levels, right? We've seen this with, like, Aussie was a good example earlier this year. It's really one of the only trend moves we've had, right? You got an Aussie overbought signal over here, pull back, and the pullbacks, we get the buy signals on this, and the pullbacks continue to hold good levels. Eventually, it stopped going above even 70, and you were getting to divergent signals, at which point it was time to go the other way and short. We, by the way, are out of a short here at 76 today, break even. Anyway, moving on with euro, here's another reason to kind of like it from just a purely objective standpoint. You get the 20-day average under here. It's been pretty good all year, right? This is the start of the year opening price, 20-day average, support, 20-day average resistance, coming into one more spike lower, could get us support to go higher. So throw that in there as well. Okay, moving on, cable. Cable, screw you. I have cable. I have tried to buy it twice, got stopped out. I think cable goes a lot higher. It's just the way I just do. Okay. Question is, look at all this bull down here. Really? Like, I'm pretty sure that the only reason it traded down yesterday was to stop people out. After thinking that had been survived after all this, and turns up, looks good. Nope. And then here we are back at the short-term highs. Anyway, from here, cable would be looking, if you do get a negative reaction on, or a dollar positive reaction on FOMC, I would look at 2160 support. It's the weekly opening price. I guess it's about 52 is yesterday's close. But yeah, I'd look at 2160 as the support level to watch. And BOE tomorrow. I don't know, I don't have much insight into what they are going to do or say, but cable being cable, would be open to, again, a final move down on 2040, 2080. 2040 is your daily reversal support, close for 116. Basically, I like cable higher. Okay. Now, excuse me, I'm kind of sick here. I like cable higher, but don't kill yourself if you don't get the exact low. Uh, April is a really good month for pound, and it lines up perfectly with this analog, right? Which is the 1989 low and rip. So don't worry, if you get the golden opportunity to buy cable, um, at 120, 40, 80, then awesome, right? If we start to turn higher in the near term, then we'll look to identify support on dips. I'm wary of chasing, just given how cable trades. This is the daily analog lined up, and it actually does suggest that it might not be done. Right, the next few days could be and weeks could really be quite choppy. Once we get into April, it'll just be time to buy it. All right, so be picky. I've tried to be picky, and unfortunately been stopped out and it's turned up both times. If you were to just go long and put a really wide stop on it, you'd probably work out pretty well. Just not my style. I've also never really understood people that say I'm going long or short with a stop on a daily close. Okay, so you're telling me that if there's a nuke somewhere at your daily close, yeah, you might be broke by the morning, right? Never really got that one, right? The daily close people and their stops, I'm sure how'd that work out for them on SMB, right? I don't know, whatever. Anyway, so there's my rant for the day, for the webinar. But with cable, if we go to the short-term chart here, look at the chart like we did with Euro, 4-hour momentum. We got the divergence here yesterday, right on the low, of course, got stopped out, turned up. 22, the year open, 2278 actually is a level to pay attention to, but I wouldn't want to fade it because at that point, we're looking a lot higher, one, and two, you have a volume level. Now, I'm assuming you're going to get new volume levels today, okay, because with all the event risk coming. But you would have at this point, if you did go to a new high, you would have a 1, 2, 3, 4, 5. So at that point, the risk would probably be for a pullback again, right? Especially with the analog and the choppiness. So brave souls might want to think about looking at the year open as a level to fade into at 2278. 20-day average is a little higher at 2330, and that's been a pretty decent support resistance marker for several months now, right? General direction, at least, sometimes quite precise. And then, maybe we get an idea or a scenario in which we can buy a pullback later this week or even on BOE. So general idea is pound higher, but still beware of 2278, 2330 for resistance. Okay, Aussie dollar. Aussie dollar, we've got to remember that we're coming off of important resistance, and eventually this thing is going to go nuts higher. Is this an A wave? Might be, right? A, B, one more drop C, and then higher. That's kind of what I'm thinking. You do have a discernible 5 waves. Okay. On the downside from the top on 223. 1, 2, 3, 4, 5. A, allow the shenanigans from FOMC. You might get a spike in both directions. A, B, C. 76.50 area is one to pay attention to for resistance, in my opinion, in Aussie dollar. For the final drop lower, 74.40 is still 74.50 is still a beautiful spot to start looking a lot higher. And I'll get into why, but that's the idea, I think, with Aussie, right? A little higher and then a dump lower over the next couple of weeks. And Aussie dollar, by the way, what we said, the 76.40 something was the 618. Well, the monthly open is 76.45, right? So that should be a good area anyway. So you got a lot there to work with. And this would probably be, I guess, a good time to take a quick peek at copper. We still got copper support a little lower, right? 20, 50, 60. Of course, we get bulled up or bared up on Aussie. We think it's going to go lower, just like copper, and then they start to move very closely together. They've both turned up sharply 4 days in the last 4 days or so. The copper support is still lower, okay? Just like the Aussie support is still lower, right? Be patient, be disciplined, wait for the spot. If we start to get up here to break out, then fine, okay? But until then, wait for the level to come in. So that is Aussie dollar. What about Kiwi? I still like a short here. 67.50 just looks too good, like it needs to go there. We're getting up into resistance, 69, 70, 70, 85 or so, something like that. You got the high here from a couple days ago, 69.77, 1, 2, 3, 4, 5. Was that a 6-day high? 69.77, an area to watch because that high from the 8th. Okay, and the stop can be pretty tight because I wouldn't want us to go back through the channels, right? So you can see Kiwi at the oversold. If we are going into some sort of at least another leg lower, we should get it from pretty close to here because RSI in the 4 hours up near 60, right? There's the trend line, and really we're looking at probably something like this, okay? So 69.80 or so would be about where I would expect this thing to fail if we are going to get 67.50 over the next couple of days, right? Boom, boom, and then maybe a low. Another thing with going back to Aussie real quick, sorry, but so the 52-week range, right? The midpoint of it is 74.47. So that's another area why I like the 74.50 so much. It's been brushing against that resistance for so long. And the midpoint of the resistance, or the midpoint of the 52-week range, is kind of an area that you'd like to see hold, right? I know it's very different because back here it was such a cleaner trade in 2000, 2001, 2002. In other words, you had volatility, but same idea, right? Once we went kind of through, you started to hold the 52-week midpoint on the way up. Once we made 52-week highs, you pulled back, and then midpoint was the support, okay? This, by the way, from April 2001 to August 2002, this area is where we are thinking we could be in time, okay? In time being like this. Oh, that's the gold chart. That's the gold comparison. Hold on, sorry. Here, we'll go back and copy it. Do it up. All right, so if we do this, copy the lows. Right, back into the high. You can see that we're looking to track. Basically, went through a period where we were tracking really closely, and then we deviated. Right after the election, the analog was up. I thought we were breaking out. Did not. Came back, turned back up, and we could be in line with it again. So this could have just been a period in which it didn't, it's kind of diverging from what we thought it would do, but we could be back in line. And if so, we would be looking for that final low, probably at the very end of March, very early April, which lines up with the same thing as pound, lines up with the seasonality in dollar. Oh, I'm getting excited. So yeah, and then this lines up with what we're thinking: A, B, C, and then off to the races higher in April. Okay, so there's that. So Kiwi is one I'm looking to short here. Okay, dollar yen. Let's go to dollar yen. So dollar yen, I like us lower for like the next 150 pips or so. And I think this is one to pay attention to, like really close attention to today. Okay, as we with FOMC, even with BOJ tonight. All right. So here's the weekly chart. Again, your bigger B wave is probably going to be in a while, right? This is probably A, this is probably B, heading lower to C. But on the daily chart, I do think the dollar yen is at risk of falling back into 113.20 over the next 1 to 2 days. Here's a few things why. So we've seen the comparisons between 2014, right? We thought we were here, and that we could still play catch up to do that, right? So if we do this, this is still certainly possible, right? We can still play catch up. That high on basically NFP or so. We still could do this, come back into the trend line, and then go higher again. Okay, but there's another comparison, and that is basically with the decline after Brexit. This one, lining up the lows, we're at a period where we're probably need to sell off into a low again. Okay, in fact, if we line up the lows, you can see low, 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 right? All the sequences of lows, low, 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 which means the next low is probably around the corner, but that means we're going to sell off before you go higher. So I actually like dollar yen, down to 113.20 from here. And 113.20 is just your weekly reversal support, right? If you take all that is take your weekly bar or your weekly bar chart, and there's the close of it. Okay. So I like this lower back into 113.20 and then higher. And how to approach it today, going into FOMC with a short position, I'd rather see, because again, I wouldn't be surprised if you got an initial dollar positive reaction for all the reasons mentioned, but gold being the big one with 1180 just huge. And if you got that, I'm assuming you're probably going to get a quick spike higher in dollar yen, at which point I'd want to sell it. Maybe not immediately, but sell it once it started to stall out some, right? take it down to 113.20. So that's my thinking with gold. And then if I go to the analog, right, the one we've been following with the 80s one, it's still useful. Okay, the big B wave top that we're looking for is probably going to be up at the very end of this month, early April. And guess what? That lines up with pound and Aussie again and the dollar seasonality. Lo and behold. Mohammed asking about Euro SEC. I will certainly look at Euro SEC. No problem. Let me get through the stuff that we want to look at, and then I'll take a look at it. By the way, dollar yen. Here's the seasonals for dollar yen. Right. Look at coming into a low this week, and then higher for the rest of the month, and then night for a while. So yeah, dollar yen lower than higher. Back to 113.20 then higher. Which brings us to euro yen real quickly, but we were able to get that short position on euro yen and would still be looking maybe for the trend line at 120.140 or so, which is where the target is. So we'll see. Could get lower than that, obviously, but I'm not trying to stick around too long on this. Okay, there's dollar yen. Finally, dollar CAD is the last major. Then we got some crosses, silver, stuff like that. And okay, so dollar CAD. Dollar CAD, we still have the probably going to go through the December high at some point before we roll over. If you were to get a dollar spike higher today, I would want to sell it up here, okay? Because we are still we are holding this, as the note last night, we're holding the support in crude oil, okay? Nice crude oil here, nice bar. Crude can do its thing down here for a while, of course, but I do like crude higher for at least a couple days. And this blue line would be your midpoint of the channel, so it is your median line, and it would be the level to watch for support. And you know what? If we got A, if this is B, and we're going C lower, the two equal legs get you 33.81. So really, I'm kind of, wanting to fade either direction on this, with 33.81 being support and resistance up here at 35.60, which is daily reversal resistance. Of course, the test, the high would be 36. So essentially, you have spots to look for a top and look for continuation higher on oil. Okay, or sorry, on dollar CAD. Mohammed saying maybe 50.75 for oil to sell and join the downside. Well, that would you're assuming there that I'm bearish oil, or that I think oil is going lower, which is not necessarily the case. Okay, so we've got support down here at 33.80, 90 again with dollar CAD, and then looking higher towards 35.60. Basically, just play the parallels. Okay. All right. So Mohammed's got a 50.75 for oil to sell and join the downside. All right. So let's go. Let's take a quick peek at crude oil. So here's the thing with crude. I don't know if crude's actually extremely bearish here. You've got A, and this could see all this price action from June of 2016 is all really choppy. This could be a triangle. This could be A, this could be B, this could be C. In other words, you could get something like this. Okay, we could be in this range and then break higher, but we could be in the range for a while. So and here's another thing. You know how in triangles you get alternating legs for alternating legs for the 618. So if we take this leg here, I already have the measurement here, but I'll just do it on the chart real quickly. A, okay, relates to proposed wave C by 618. It would be a 47.54, which is on the trend line anyway. So if that's the case, we could actually trade higher than I think a lot of people think. Now, the big level that I would want to fade, Mohammed, now, so I'd want to be leaning towards the bullish side here, but the first day of the year reversal bar, which is again daily reversal resistance, right? That's 52.46. So 52.46 would be an area that I would be looking at on the as resistance, okay? So yeah, that's what I'm looking at with crude. All right, so moving on. Dollar CAD, basically in summary here, guys, is I think dollar CAD is kind of levels to fade either way. The big trade is probably to fade a new high and above December's high, but that might not be for a couple weeks. Okay, in the near term, I'm looking at 33.80 support and then resistance up here. Range highs 35.60 to 36. Mohammed saying, yeah, Sarab asking about silver, which I'll definitely get to. Mohammed asking if we could see a move similar to May, July 2015. Oh, in crude, May, July 2015. May, July. So you're saying up here, right? Like a rally. You're saying up here? Oh, so I'm not sure exactly. I guess if you're saying could we bounce from here, yeah, we can certainly bounce from here. But then if you're thinking, are we going to plunge afterwards? That I'm not so sure, right? By this count, which is the only count I can seem to make any sense of at this point, it's higher to up here and then a dip and then higher again. Okay, moving on. So silver is another one of those tail markets, right? And I think the final low is going to be at 1625 or so. We got really good resistance up here a couple of weeks ago when nobody wanted to be bearish silver, and finally it did what it needed to do, and it has plummeted and probably wiped out a lot of people because there was a record long position on COT up here. So assuming that there's a good deal getting wiped out, we'll find out the new figures on Friday, right? Which will include a lot of the sell-off. So that should be interesting. So yeah, get ready for a big silver support potentially near 16.3, just below 16.3. And another commodity actually that is interesting, even if you don't want to trade it, but this is iron ore, and iron ore is pressing into major resistance. Okay, I think iron ore is a buy on dips. It's kind of the same thing with copper, and kind of the same thing with Aussie. So this is a chart that I like to keep up I'll check it every week or something, like on a Friday. But great channel. If we can get up into resistance and pull back, then and it'd be a pretty sharp pullback, but that would set the stage for the next big rally in probably iron, probably copper, probably inflationary things like emerging markets and stuff like that. All right. Okay, so getting towards the end here, and that's good because I'm about to keel over. And I needed to drink some emergencies, I think, before FOMC or something. All right, Euro Kiwi and Kiwi Yen. So Euro Kiwi, I wanted to look at a different chart. What am I doing? Here's Euro Kiwi, right? So Euro Kiwi actually traded up just a few days ago into the election high. That was the election high on Euro Kiwi right there. And we didn't quite take it out, actually, almost. But with this, there's a few things to look at. We're looking for upside continuation in Euro Kiwi, as we should be because of the move being insane, momentum on the upside. And again, bigger picture, you do have the you do have an A, B, 1, 2, 3, 4, 5, C. Okay, so you could very well pull or get going back again from here. This is the median line of a very short-term fork. Obviously, you would rather see it pull back take a little more time to do something. But don't think that just because you got really overbought over here doesn't mean or means that you have to like crash or something. Okay, case in point, the last big move for Euro Kiwi, on the way up in 2015, we had an RSI above 80. We didn't quite get to 80 this time, but the next pullback was to 160, and there were 2,500 more pips on the upside over the next 2 months. So would I rather see a deeper pullback here to clean things up a bit on the near term? Of course, I would. Is it going to happen? I don't know. One thing to pay attention to on RSI on the daily, though, if it pulls back from here, if we continue to pull back, watch 60 on support. If you find support at 60, it's going higher. All right. And the year open, of course, is 151. Ideally, we get some bounce here. It is the median line, and plus I've got Kiwi coming into resistance, but that takes the euro out of the equation. And of course, you can't really do that. You got Dutch elections and everything else. So Euro Kiwi, interesting one. And Kiwi Yen could be a really good one. Kiwi Yen, check this out. Okay, we've got this slope line here, but I'm more interested in actually getting back up. So 80.45, 2 equal legs from the low would give you A, B, C, okay? And 80.45 happens to be 2 equal legs up. That's also the low from December 23rd. This is a double top. The double top target is down at 77.15. So 300. If you get 80.45, you got basically 300 and 330 pips of downside. Okay. And 80.45, I'd be looking at a good stop would be 81.55. So 3-1 on that. Okay, would be where you could go. Muhammad, not sure about the 77 level. Yeah, I mean, don't worry about it, So let's see if we can get a move up into 80.45, 80.45, and this is probably one of my favorite setups at the moment. Okay, we had a question on Euro SEK and Euro Pound, and let's look at that. Euro SEK, Euro Pound. Guys, I apologize for my, I know I sound terrible right now. I've got sickness from my 2-year-old. 'Tis the season, I guess. Not to mention spending time on a plane recently probably makes things worse. Okay, we'll go do. I'll do some Euro Pound first. Okay, so log chart Euro Pound. Still an uptrend here. Okay, we've actually come back and retested some support here. I have not much of a reason to want to trade Euro Pound, really. I mean, essentially, I can see this going either way. I don't have a strong opinion. I'd rather mess with the dollar here. I'd rather be looking to buy both Euro and both Pound, right? I mean, with the political risk on the Euro side, I guess you can make a case that this is a decent short. The resistance here, this is former support. It did become resistance 2 days ago. You have pulled back. Let's look at the momentum on this. Hold on. So daily momentum, one reason to be kind of, I guess wary of the downside, at least broadly speaking, is the fact that you have support on the lows. You can see the overbought up the highs and then finding support down here on the lows at 40. Okay. I mean, I guess it could be a range trade. If I'm going to be short, it's going to be Euro Yen. It's probably going to be, maybe Euro Aussie for a little bit, right? Because that chart yesterday. But I don't have a strong idea on Euro Pound. I would say that if you are in a short position, I would keep risk up here, right? Up above 88, just because would be a break of this level again, and then you could go a lot higher. Euro SEK, I have not looked at this. As you can see, there's no lines drawn on the chart. So with Euro SEK, a couple things jump out at me. One, it looks like a impulse. 1, 2, 3, 4, 5. Looks like 5 waves up from 2012, doesn't it? Okay, let's see here. Let's see what that gets us. So those are parallels. You can see pretty good. It's going to cut across there too. So here's Euro SEK. It's actually a pretty clean chart. Oh wait, I didn't even draw that right. Hold on. Got to draw it from down here. 15 degrees and 15 degrees. Oh, and it's literally perfect. So that's interesting. So where would the center line for this be? Probably something around there. I'd be looking for support probably lower though. So yeah, for Eurosec, I think you got 5 up, so you're at risk of pulling back, maybe back to the support line at some point. Near term, you could get some support down here on this parallel, right? Obviously, this is a good angle to follow because of what happened here. Look at that top; it's perfect. So, would be looking for maybe a pullback into or continuation lower from up here down to I call it, or sorry, 927, 928, and then might get a bounce. But ultimately, with 5 waves up here, would be watching for support down here. Let's see if there's any fibs on that. You can see that you've got later in May, you have the intersection of the 618 at 890. So that might be something to prepare for. You can see this would be the center of it right here. So yeah, these are good. It's good angles here. It's if I were trading euro sec, I would put this on here, and I'd look to trade resistance here and support down here. And dollar INR, the rupee, which I think we actually looked at last time with Puja, and lo and behold, to actually pretty good looking chart. You're making a double top today, and this is exactly what we were talking about last week. Was actually if you were to trade back under this, right, that would indicate essentially an impulsive move to the downside because you will have traded out of the channel, and you would also make a double top and break support. So on this, if you get a pullback into this line and into 66.05 or so, which is the low from April 2016, you look to put on a short position to go lower with it, okay? And your double top target, by the way, would be 63.32, which happens to be right on a pretty big horizontal level anyway, right? You can see that there and that there, same area. So dollar INR up into 66 and then lower to 63. Russian ruble, dollar ruble. I think we actually looked at this not long ago. I don't know why I don't have my levels on here. Let's see here though. Yeah. So we have a level here from the old channel, um, in which, you could hold up for a little bit here. Although the thing is, of course, with crude oil already finding a good support region, it's going to be the really good, I think the really good buy point on dollar ruble could be later this year. If it ends up coming off more to retest basically the lows from March 2015, which would be the median line of this old thing, which crosses right here, big resistance May, and then that's when you got the real acceleration higher, right? So there's nothing really to look at on a daily chart. If you were to draw this, it's probably too steep to really be of any use, right? Here's how I would look at it from a trading perspective. Break of this was a break of support, okay? So 60.77 to about 62.20 is resistance to take you back down to 48.70 or so, at which point I'd be looking for a bigger bounce. So a couple levels to pay attention to. All right. Okay, guys, I got to wrap it up here. And again, go back. We talked about the biggest thing I think to watch today is gold 1180. If you get gold 1180, I'd be watching for resistance in the dollar generally, especially dollar yen, right, on FOMC. So we'll leave it there. But good luck today, and I'll have everything up and archived ASAP. And of course, I'll be around tweeting and stuff for FOMC. All right. Take care, everyone, and cheers, and have a good day and week. All right, bye.